Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning, and taking a look at what's coming up in the next week and the coming days. What are investors going to be tracking? Well, let's talk to the CIO of Trackrecord. He is Phan Vee Leung. Good morning, Vee Leung. How are you doing today?
I'm good. Let's talk about markets.
So let's talk about what is right front and center right now when it comes to the list of stuff you're tracking. I think one of them will be the CPI numbers that's going to be released. Walk us through, what are your expectations around the consumer price index numbers? What are the moving parts here that are going to be worth looking at?
Well, the market expects inflation to be ticking higher for July compared to June. So the headline number they're looking for is for 2.8%. A year-on-year change on prices, and the core index, which excludes the more volatile components of fuel and energy and food prices, they expect the inflation to be at 3%, higher than the 2.9% in June. So that's the market expectations now, and it's also quite in line with what the Fed projected in the U.S. Federal Reserve, the Central Bank of U.S., projected in their June policy meeting, where they pushed up their expectations for the PCE, which is their preferred measure of inflation for the U.S., higher than their projections in March. They do a projection every quarterly meeting, right? So the next one will be in September. But that's not really tracking right now. They've been expecting a tariff effect, meaning higher prices that U.S. consumers have to pay because of the tariffs to flow through to the inflation numbers. However, as we know, that the president of the U.S., President Trump, has been very, very angry with the Fed governor, calling him an idiot and various other names for not cutting interest rates. And I think we may see, because the market currently expects inflation to be higher than previously, we may see a more benign market reaction, right? Because I think it's possible that it may not be as high as expected. My view for the longer run, of course, from month to month, it's very hard to predict what the numbers are and all. But I think the tariff effects, although it's starting to come through, but it's not as bad as previously feared at the beginning of the year and even at the current state, right? I think it's not really coming true because the fear was so much higher in tariffs, but President Trump has been revising it lower and he's been delaying implementation as well. So another thing that will influence inflation, especially in the months ahead, is increased productivity from AI implementation. I think we are now at a juncture where implementation of AI is beginning to flow through. It has started the big giant tech companies, because we have seen stellar earnings reports from these giant tech companies. But I think the implementation in the months ahead and the weeks ahead will be starting to flow through to the big corporates as well, and we're going to see productivity gains that's really quite unprecedented in the history of humankind. I believe. I think in the year ahead, especially, we'll see massive gains in productivity, and we'll see inflation trending lower, and that's coming through in the discussions among the Federal Reserve policymakers as well. We saw a dissenting vote in the previous meeting in July. There was a 9-2 vote to keep rates unchanged, but 2 governors voted to cut interest rates by 0.25%. And it's been a long time since 1993, we have 2 dissenting votes in the decision. So that's a very long time, and it's a very big part of something that I'm watching as well, because the Federal Reserve Chair, his term ends next year, and the president is currently looking to nominate the next governor, the next chair of the committee, and we are likely to see politicking among those that want to be selected, and they will be very vocal about cutting interest rates because that's what the president wants, and so that's something that's going to influence the discussions in the Federal Reserve Committee going forward.
Yep, change in the air, and we'll be looking out to see how much tariffs will change the expectations of rate cuts to come or not, or how fast they will be. So tariffs is a big part of the conversation right now. Also, that's feeding into markets, as you point out, in terms of expectations on productivity gains. So with that backdrop, we have seen records being hit on Wall Street, at least. The latest, of course, the Nasdaq Composite, a 1% gain last Friday to a new record high. The S&P 500 also very near record highs. Is that a lot of optimism, you think, or is it still room in terms of upside to jump on this bandwagon?
I think, although currently now, by many measures of investor involvement, it's quite high involvement by asset managers now, but it's still a very relentless bull market, and that's because many people still believe that something bad is going to happen at some point, right? The tariff discussion, the geopolitical worries between in the Middle East, which has subsided, as well as Ukraine. We currently have a sitting president that's very, very involved in getting the stock markets higher, right? He's posting on his social media when to buy stocks, when stocks are going higher. He sees it as a personal barometer of success for his presidency. So I think the trend is relentless. It has been paying to buy dips for many months now. It will continue to be so. If you talk at the beginning of the year, I said there's going to be near breakout of total war in the Middle East. The relentless war in Ukraine continues. We have the U.S. president implementing inflation left, right, and center for all trade partners. He's arguing with everybody. Most people will think markets will be higher, right?
So what will you be buying right now when you're looking at the current opportunities?
I think the thing about trading is you try not to be cute most of the time, right? You try what has been working, and what has been working is to buy U.S. tech stocks, especially the tech giants, U.S. NASDAQ. As you said yourself, it's making all-time highs. It made all-time highs last Friday again. You continue to buy dips on that. And another thing that if you think, I need some diversification, gold, right? Gold has been doing really well. Gold has been doing really well despite risk assets doing well as well. They tend to trade in opposite direction in times of stress, but it's doing well. Stocks doing well. Gold's doing well. Crypto is also doing well. We are seeing not just Bitcoin near highs.
All right, we've been in conversation with Phan Vee Leung, CIO of Trackrecord, talking about the latest CPI numbers on tap this week and also his view to buy on the dips, gold, and the NASDAQ. You've been listening to The Bigger Picture. Stay with us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.